Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders and investors, checking in on the market today. A massive drop, down 9.6% or so in the S&P 500. Bull miners down 36% on NUGT. A lot of ugly red, certainly times that we'll look back upon in years to come and say, remember when this craziness happened, just like we do to 2008. So before we get into it, just a little note and a reminder to do your best to have extra patience and compassion in these times. There's a lot of people very stressed out. And we can do our best to try and balance out that stressed out tension energy by being calm, cool, and collected. So I'm using SPX on the chart here because SPY is not showing accurate data on TradingView. So we're going to go to SPX. I did put out a video about an hour ago with just broader thoughts about the virus and potential headline climaxes I'm keeping an eye out for and things like that. So check out that video. But looking at technical analysis, I personally will be looking to enter an initial scale-in position on any weakness tomorrow. And my game plan, I talk a little bit more about that in that last video. But I'll be looking to scale in 4 or 5 positions, and I will be looking to alter my game plans based on when the daily bounce does take place. I do believe a short-term daily bounce is going to occur in the near-term future. The question from there will be, is it just going to be another one of these with a lower high and lower low? I'm also going to be watching for a weekly bounce to take place shortly. The fact that we've gone such a straight dump waterfall in 3 weeks, obviously extremely overextended. 2346 is the level that we're looking at now, the low of the dump in December 2018. And for SPY, that level is 233.76. So I will begin scaling in. I'm going to put plenty of space in between my orders. And the biggest factor is, number one, my age, 31, no dependents, no debt, no responsibilities in that regard. And also the fact that my IRA, which I'm going to be using for this, is only about 9% of my liquid capital. And for a lot of people, it's 50% plus. So I could scale in and the market could blow up and go to 0, and I'm going to lose 9% of my capital. So just be aware that that's my game plan. I'll keep updating. I did a whole swing trade video for Chart Guys members that has my game plan in it. But otherwise, one day at a time. And we have to be skeptical of bulls on every single bounce. For 2 days now, every single bounce has been for shorting. These moves, when the Fed announces we're going to put $1 billion into the market, it's great for a short-term squeeze. We see the algos and the high-frequency traders responding to the headline. Shorts get squeezed to a certain degree. Anybody that had a stop loss based on today's levels was stopped out from any short positions on this move. But trends are so much more important than spikes. A spike is a knee-jerk reaction. A trend shows you sustained buying. So if you see a higher low and then a higher high, more bulls bought that missed the initial move and more shorts that re-entered then had to cover. So if we top out, and that's going to be so important now because now we have 2 days where the market has programmed into their brain, just short every bounce and you win. And the time where that does not work, and the time where we see a significant spike and then a higher low and a higher high, a lot of shorts are going to be entering here and then get stopped out. And that helps fuel the move higher. If we do not change the hourly trend, the bulls prove absolutely nothing to us. So anything under 266.66 right now will just be an hourly lower high. And if we start with a gap down open tomorrow, I will be a buyer. Slow scaling in. So the next support level we're looking at on SPY is that low of December 2018 level. This chart, the dollar, is telling us that everybody's taking their stocks, their gold, their crypto, their bonds, and they're hoarding it into cash, and they're protecting it for now. And we will see how long that remains the case. We will see if the dollar goes down when people when the stock market starts bouncing, and maybe that'll be a clue that people are starting to enter a little bit and see a little bit of fear drop off. But again, the daily trend change will be important because any bounce, we're just looking for a daily lower high. We don't have to try and catch falling knives like I'm doing as part of my game plan. Again, I can be more high risk with my current scenario. We can wait for the daily bounce, not feel any FOMO, not feel like chasing, and then try for the daily high or low and place a stop based off the low at that point. So the dollar is bouncing, but we're just looking for a lower high compared to 99.91. And then once we top out, we'll then just be looking for a higher low compared to 94.65. Hourly had a bit of a climax. Maybe that's our temporary top, looking like a daily inside bar. Could be likely tomorrow. IWM is still in free fall, closing at the low. Daily RSI is in the teens. Weekly RSI crushed, almost in the teens. We have given back. Let's look at the monthly chart. In 3 weeks of a drop, we are trading at prices that we were at 4 years ago, 3.5 years ago. So small caps are getting trashed. Hourly time frame, anything under 119.90 is just an hourly lower high, keeping the bears in complete control. QQQ, still very weak, down at its low. The low of December is a long ways away. Again, the tech sector is still the hope of the market right now. If the tech sector doesn't collapse, we're going to be okay. Again, you look at the Apple monthly time frame, and you just show me this chart, and you tell me nothing about this chart and nothing about the market environment. I say, yeah, we've topped out, but that's healthy consolidation. We're looking for a higher low. We were overdue. We were overextended. So if Apple and if Amazon, I guess Amazon's closer to getting there than Apple is, but if Apple and QQQ start to break monthly supports, then big red flag that this is going to be a lot more downside. So for QQQ, look at how far above the December 2018 lows we are. That was all the way down at 143. We can drop another 20% to get there. We do still have support here. 169.27 is a key level because after these two little 169 levels, then we have a lack of support. And SPY and the S&P 500 has already entered that area of a lack of support. So bulls are hoping that the tech sector does not enter that area of a lack of support. The financial sector, little bit of a bounce off the end of that's not accurate. Not sure why these charts aren't updating on TradingView here. XLF closed at 2037. So we closed right near the low of the day. So it is not a green candle. It's a close near the low. And we're looking at the December 2018 dump level, which we have fallen through. We're now looking back at 1940 as the next support level. And again, we are hitting prices in the financial sector. We were at an all-time high 1 month ago, and we are now at 3.5-year lows. It just shows you the speed of this dump and the magnitude of this dump. The healthcare sector dropping to lower lows. The weekly time frame, the next support we're looking at is 84.65. That broke, so 80.61, the low of December 2018 dump. So that level is still holding. Again, hourly time frames are our guides to know not to trust bulls. As long as we're seeing 5-minute lower highs on every bounce, and as long as we're seeing hourly lower highs on every bounce, we know, don't believe the bulls. They are not proving follow through. Biotech sector, weekly support, 72.97 broke. 64.38 is the next level. Everybody's looking to the December 2018 lows, except IWM and XLF, which broke their daily supports first a week ago. They're breaking their weekly supports, or their December 2018 supports first. SMH closed at the low of the day, 107.41 and 97.61. TLT, daily inside bar. If it breaks bearish, we're going to start seeing RSI a bit more extreme. The hourly RSI got right to oversold and then bounced. But if we see a break of 155, the current low of consolidation, we're going to be looking down at 152.36 as a key support to try and form a daily higher low. Certainly an exodus from the 20-year Treasury bond over the last 4 days. And if you look at the dollar, how many days have we been bouncing? Just about 4. The VIX is exploding. Massive move. 96.40 from 2008 is the only level that we're looking at from here. Hourly uptrend is our guide, keeping the bulls in complete control. Anything above $60 or $59.90 is another hourly high or low. And it's worth keeping an eye on when that hourly uptrend is lost. Maybe we can get a clue from there. Maybe the VIX loses the hourly uptrend before the S&P 500 changes its hourly uptrend to the bulls or hourly trend to the bulls. So potential little clues we can look for. Gold. So I am now all out of my GLD position. I exited half when I got that red flag that gold was not going up significantly when the dollar and the S&P 500 were dumping significantly, which tells me any bounce in the dollar or the market can only hurt gold from here. The bounce in the dollar has hurt gold. I exited today for the rest of my position back to all cash, and that was in my IRA, which was all in GLD, and now I'm using those funds in my IRA to start shifting focus to SPY. 1563 support broke. We can still consider this a bit of a base of support if we get any bounce follow through. It is a head and shoulders setup as well. But again, this is with the market not bouncing. This is with the market in free fall. So if money starts going back to the market for a bounce, it's hard to imagine money going into gold. So I'm cautious gold. I almost re-entered a little bit yesterday, but back to ignoring gold for now. Let's see what the monthly looks like. It's a little toppy. Might be patiently waiting for a monthly high or low to try and form. 4-hour downtrend is our guide, and here we are testing the low. Silver, dumping. Daily inside bar, bear break, and then follow through. And again, gold strength versus silver is massive. Many year highs. Just continues this strong move. So silver bears are back in complete control. This silver chart is breaking down. Monthly, you could consider this a monthly downtrend now. Lower high and lower low. And just like that, silver is back to levels that we were at 9 months ago. Bull miners are getting absolutely trashed. Again, NUGT was down 36% today. We're going to need a reverse split eventually soon here. 1180 and 1056, but this is the leveraged version, so those levels don't mean anything. If we're looking at GDX, 2014 is the key support that needs to hold. But you look at this monthly time frame, it is not encouraging. So I'm probably done with gold for now, for the foreseeable future. Oil. This is the most important chart for the next 2 days, in my opinion. Two things are going to happen. One of two things. We are going to confirm the daily bear flag, and markets will not like that if that happens. And if we break 2740 and it can keep the S&P 500 and the Dow in free fall, or the bulls show up, defend that low, and change the daily trend by breaking 3628. And it might not happen in 2 days. We could trade within this tightening range because of how much range there is there. We could trade within it for a solid, 4 days or so. So we could easily hold 2740 and then see a bull move, but fail to break 3628, and that could take us into early next week. But keep an eye on oil. I will have less confidence scouting for a market bounce if oil breaks that support. Natural gas trying for a daily higher low, 4-hour time frame. We need a trend change. We're just looking for a 4-hour lower high on this bounce. Bulls would need to hold 175 and break 188. We haven't even pulled back enough to call it a 4-hour lower high being set yet, but need to see the 4-hour trend change to have confidence the daily higher low is established. 1754 is now a key short-term support. But overall, cash. People are hoarding cash. The question now is, what are people going to do with that cash? Are they going back to bonds? Are they going to go back to gold? Are they going to go back to stocks? We'll have to keep an eye over the next couple of days to see how it plays out. Stay safe and protective out there. It can always go lower. Just keep that mantra in the back of your head. It can always go lower than you think. Have a good rest of your day. Get off the computers, get away from the markets. The message in the video that I put out earlier was, markets don't exist in nature, and that's a great thing.